Hi, everybody. Good afternoon, good evening, and good morning, wherever you are. Thank you very much for joining the Boardroom Club today to our AI Summit, featuring executive from top tech companies revolutionizing the world as we speak. My name is Yossi Garmazi. I just graduated with MBA from Cornell, and I'm joined here also by former classmates and a good friend of mine, Álvaro Jiménez. Álvaro?
Glad to be here, Yossi.
Yeah, so today we are fortunate enough to interview none other than George Mathew, a managing director at Insight Partners, who focuses on venture stage investments in AI, ML, analytics, and data companies. Among his investments, you could find Databricks, Weight and Biases, Grow AI, Relevance AI, Anihive, and many other successful and cool companies. And before Insight, George was also an established operator, serving as the CEO of Casper, CEO of Alteryx, and he's also a Cornellian, by the way. So, George, thank you so much for joining us today.
Amazing. Thank you so much for having me. It's a pleasure to be on the podcast today and just have a conversation about everything in software and AI and where it's all headed.
Looking forward to it as well. So, George, I thought to start with an easy question to begin. So, what led you to the tech world in the first place?
Sure. Yeah, I will say we probably have to go back to my time at Cornell, which a lot of my classmates were celebrating our 30th reunion this past weekend, which I unfortunately missed because I was taking my daughter to her SATs on Long Island. And so I had to.
Hopefully, it went good.
Yeah, it went well. It seems like it did go well. So we'll get the scores pretty shortly here. But 30 years ago, when I was still up on the Hill, 31 years to be precise, the folks at NCSA in Illinois, Urbana-Champaign, shipped a browser. And it was a fellow named Mark Andreessen who was at NCSA at that time that shipped the NCSA Mosaic browser. I was actually studying for my MCATs that summer at Cornell, and I saw the browser and I called my mom and said, I'm going to go figure out what this is. I'm not going to be a doctor. So that was where my tech journey really started. It was really just when I was up on the Hill and just spending a lot more time in the inner workings of how computing systems worked versus studying for my MCATs, where I got my bug in going into the field of just computer science, machines, software, the AI systems, which is where I work today.
Yeah, that's amazing. And you also, before you joined the Insight Partners, where we actually know you now, you had a vast amount of experience, including serving as an executive at Casper, Alteryx, and even SAP and Salesforce.
Sure.
But I was just wondering what ultimately led you to transition to the venture capital world, and how pivotal were your previous roles in shaping your success as an investor now?
Yeah. So, I think what most people look at a background like mine don't necessarily say it's the first person to go running into venture capital. And I would say that turned out to be a bit more of a unique opportunity for someone like myself, particularly being in venture for the last 5 years. What I quickly realized was that my mindset for venture was very similar to where venture originally started, right? Which is folks that have been builders in their past, they decide that they're going to be working with multiple founders in their respective journeys versus, necessarily kind of turning venture capital into its own career, into its own right. And so I coming in, later, middle of my career, took a lot more of that mindset of what venture capital used to be like. And I looked at it as an opportunity to work with founders that were in the middle of building tremendous companies and what I could potentially do to work with them in terms of helping them go through these difficult journeys in company building, and ideally do it in a way where you're making a great investment. You're thinking about this from the context of where that initial money going in the door is and what you can return back to your investors, your LPs, as a GP at a firm like Insight. Now, how do we make sure that those returns are great? But you're doing it in a way where sometimes you're going a little bit earlier than typical. You're looking at stronger product market fit signals. You might even be considering an investment prior to revenue. And so a lot of that muscle memory of being able to repeatedly do that required, I think, a lot more experience as a builder and using those sort of experiences as a builder to come in and make earlier investment decisions, particularly when it comes to the infrastructure related to data, AI, ML. And so that's literally what I've been doing for the last 5 years.
Yeah, and I do think that it was super helpful, even for your investment that you do, that you are actually an operator and a builder. You know all the ins and outs, how company really operates. And George, you met with a tons of entrepreneurs along the way. So I was just curious, since we are now at Cornell Tech, just finished our last semester of FinTech Intensive, when you meet a new entrepreneur, what is the first question that you ask them?
Yeah, I don't know if I've got a first question I always ask, but I do have a consistent set of questions that I eventually get to in the conversation. And some of those consistent questions are, what is the primary driver for you as a founder going through this journey? So I really want to understand a little bit more about their motivation. I usually also ask questions related to where is that unique moment that you've now been able to understand as far as the product that you're building today that will be able to create enough space for you to differentiate yourself. And so this idea of trying to just understand how to reach product market fit and how the founder is thinking about product market fit is actually quite important to me. And then I typically want to get a sense of where founders see the vision of not only the products that they're building, but the company that they're building over the course of a longer period of time. So when we're looking at that initial investment, you might be going from 0 to 1, 1 to 3, 3 to 10 or 15, but in any one of those moments, you're just wanting to understand how does this get really interesting over time, and not just about, the meeting the moment of whatever the objective might be for that next 6 months, 9 months, 12 months. So I try to spend more time really understanding that perspective of what if not the longer term vision, but certainly the midterm view of what it is necessary to kind of build the company that you're building with the founding team that's involved. That's pretty important for me, really, to just get my arm around from an investment standpoint. I think it also just gets a little bit more into the, what's authentically unique about what a founder might be working on versus the 20 other conversations that you had with other founders, and frankly, the 15 other competitors that might be in the same space at the same moment in time. So those early conversations really matter because it really not only gives you a sense of a product market fit, but also just honestly of founder investor fit, right? I think that matters quite a bit, particularly when you're coming in to help a founder work through the earliest portion of their journey.
Yeah, that's super insightful. And I'm also curious to know, since you meet a lot of entrepreneurs at the beginning of the way, meaning at the seed stage, how do you evaluate some of these companies, assuming they don't have any MVPs? Is it more about the founder backgrounds, about the potential market fits, or?
I think when you're working with particularly seed stage investments, and I don't do that many seed stage investments. I occasionally will do a seed investment, but when you look at the institutional seed round and even previous to that, perhaps even looking at the initial seed investment that you might make, sometimes called a pre-seed. Those investments as pre-seed, you're almost always looking at the founder and the team more than anything else, because even the market that you might be in might change pretty remarkably, or you might have to pivot out of your initial plan for what you were basically going to go build and find other markets to go serve. So I'm always looking at those moments at what the team and the team composition and the team's capabilities are to be able to iterate, to be able to work through the difficult challenges of going from 0 to 1. I think when you get to call it the institutional seed investment, the round that you typically do before you might raise a Series A, that's where I'd love to at least see the first incarnation of a product, and that product at least meeting the moment. And when I say like the product meeting the moment, that might not necessarily equate to revenue, but you might have a series of design partners that are actively working with the product to help you improve and iterate upon your initial plan that you put together in terms of the 1.0 version of the product. I think when you get further along, say for instance on the Series A, that's where you want some kind of indicator of market traction, and that could be revenue. It also could be that there, say for instance, an open source product might have a lot of momentum and groundswell from an open source standpoint that shows itself in the metrics that are related to just seeing how an open source company is growing even before the revenue starts to accumulate. And so these things are different in terms of metrics in every stage of company building, whether it's a pre-seed, seed, or Series A. And so you're almost having to look at a different set of qualities of what the founder is doing and where the company is at that moment. But I tend to focus on team on the pre-seed, tend to focus on product in the seed, and I tend to focus on market and traction in the Series A.
And I can tell you that many of our speakers, when we ask them this question, said it's all about the founders and how the founders connect and correlate with each other. So it's very interesting to hear it also from the investor side. And it seems that your investment approach in Insight Partner has worked very well for Insight. And specifically, I mean, looking at Insight is one of the most successful VC and growth equity out there. What do you think led to this remarkable success with investments like Wiz, Monday.com, Databricks, and even Dotmatics? How has Insight Partners differentiate itself from other VCs?
I think I would start by just saying this has been a founder-led journey for Insight for almost 30 years. And that is not only about the founders of Insight, but how we've always worked with some of the most incredible founders in the world in terms of their respective journeys. But it's been 30 years that we've been iterating on the value of software and what software has brought to the entire universe of folks that are in business that are kind of thinking about the way software can transform their respective experiences. And I think if we look at Insight's arc, a lot of our differentiator over time is that what we've been able to do is, one, find all the incredible software investments in the universe of possible investments around the world, and we can have a tremendous sourcing advantage because we do a lot of that sourcing work ourselves. The second is that when you look at any investment that we make, we have a capable way of really being able to think about improving how that investment really trajects, because we have a portfolio team, one of the largest in the world, known as Onsite. And Onsite really differentiates itself by being former builders and operators that can help with improving sales, improving marketing, improving talent, improving finance, improving product, and in all these areas that you can continue to improve and from that initial investment, think about the trajectory of change that you can affect by enabling those key operational functions to be improved. That's really what the differentiation is with Onsite. And the third is that when you think about the ecosystem that we've really built, and that ecosystem is not only for supporting the founders and builders that we work with to be introduced properly to the Global 2000, which is part of what Insight does for the enterprise, but also just the strategic relationships that we have with some of the major players in the world, whether that be Microsoft or Salesforce or NVIDIA. You go down the list of potential strategics that are typically involved with the companies that we're invested into. That gives a tremendous amount of leverage in terms of what the outcomes are, in terms of that investment that we've initially made. And so those three things have been pretty consistent for us in our 30-year journey, that we have a global sourcing function, that we have this ability to inflect the growth of the companies that we invested in through the portfolio operations improving over time because the best operators are working at Onsite. And then the third is this idea that we can make the strategic outcomes occur because of their strategic relationships that we have in both the enterprise as well as the partners that are surrounding the companies that we are invested into. Those are the reasons why some of the exits that you had just recently mentioned occur. And yeah, we have a proud track record, a history of doing that across now. It's our 13th fund. It's a $12.5 billion fund 13. And we're over today 90 billion of assets under management, which puts us at one of the largest, if not the largest, venture capital growth equity firm in the world.
Yeah, definitely. And I can tell you that many of our guests, I mean, we try to get to the most interesting tech companies out there, and it just was accidental, but many of our guests actually been funded by Insight, company like Wiz, Armis, and even Sentinel One. We're gonna host the CEO in a couple of weeks. So yeah, definitely you did a good job, and we were very lucky to interview some of these folks. And
This can be like the secret inside podcast. You keep bringing, both inside portfolio companies as well as potential partners at Insight. We can kind of keep this our little secret between us that this is the Insight podcast.
we will actually consider it. I'm not going to say no.
Yeah. Well, there's a pretty long list you can work through as far as
Yeah, I saw the list. It's pretty. It could be for like the next few months at least with potential
Perfect. Sounds
guests.
amazing.
And speaking of Insight, you guys have deployed more than $5 billion into more than 80 AI and ML companies since your founding day 30 years ago, investing in AI long before the generative AI era started. But what are some of the biggest challenges that you see in AI development? We also noticed that one interesting company that you invested in, weights in biases, is helping address some of these challenges.
Sure.
We would love to hear your thoughts on these aspects.
The market for where AI companies, whether you're in the infrastructure kind of building the next generation applications, has pretty remarkably changed in the last even half a decade. My first investment coming into Insight was weights and biases. And in the case of weights and biases, it was effectively a de facto piece of infrastructure for experiment tracking, parameter tuning, version controls in terms of how a computer vision model, a traditional machine learning model, and certainly how the LLMs were being built. And so some of the biggest customers of weights and biases included OpenAI, as well as Anthropic and Meta and NVIDIA as
Good list.
model builders were using the product. And why was that? It turned out that weights and biases became a de facto profiling solution for how GPUs were being leveraged on both the training of new models and eventually how do you optimize the inferences models were coming into production. And so that was the value proposition that weights and biases had, which started over half a decade ago, and now through the acquisition by CoreWeave is part of the overall infrastructure that CoreWeave is delivering value into the AI market today. If you think about what has evolved in that period of time, is we've seen now the transition of traditional computer vision machine learning into now this generation of transformers and LLMs. We've seen the emergence of what would be agents that are now capable of reasoning through the AI space that typically we've seen models that have good ability to acquire intelligence, but now we're seeing models that are also acquiring reasoning alongside of that intelligence. And so the parts and pieces in the last half a decade in terms of what it would take to go build the infrastructure necessary for the next generation of AI applications has really come together. And I look at that as a tremendous opportunity for founders, builders to now go in and think about what are this next generation of AI first killer applications that can be built on this infrastructure that's sedimented in the last half a decade or so. So we participated quite a bit in the investments around the infrastructure that was needed to build this next generation of killer applications that are AI first. And we think that there is a tremendous opportunity to build this next generation applications. In a lot of ways, this next generation applications is going to look very different than what we have historically seen as far as cloud-based software up to this moment. They're going to look more like agents that are working on behalf of a set of users versus a person like you or I going into a web form and typing in something manually on a web form. They're going to instantiate via voice. They might instantiate through image video processing. They are going to be much more autonomous in terms of how they are working versus a AI copilot that might sit alongside of an application that you may have historically been working with for over a decade or so. And so we're in a tremendous moment right now where everything is being reimagined as we speak. And a lot of the reason that reimagination has occurred is because we've seen the foundation models becoming so capable at not only the next generation of human-like intelligence, but it's also the next generation of human-like reasoning being introduced into the models themselves. And then all the scaffolding that I just described earlier in terms of what it takes to be able to build these agentic systems. Well, it's here finally now. that you can go build this next generation of applications and agents. And that's where I'm tremendously excited to see what founders and builders are going to go do. And we would love to be part of that journey as investors and folks that can help the founders go do the things that they're building this next decade or so.
Yeah, and I can tell you that Álvaro here has a bunch of questions about all the agentic AI and all the agents out there. But I have actually another question about the rise of AI. I mean, yeah, now everyone talk about AI and generative AI as well. But do you see any specific vertical with the most potential to be influenced by AI? Is it healthcare or any other vertical or sub-vertical?
All verticals are going to have a tremendous impact over time. It's just a question of like what the adoption curves looks like. And I think if you look at where the adoption curve is today, it's pretty clear that industries that have high fidelity, high quality, high quantity of data, the data intensive industries are the ones that are likely going to be most receptive to really taking in some of the, call it scale of AI systems that are now emerging, the compound AI systems, as I like to think about them today. And so you see that in, no surprise, financial services, in healthcare, in markets where there is high amounts of data fluency. You're certainly seeing that in even areas like consumer packaged goods, where there's tremendous data fluency in terms of what the customer experiences look like. So any place where generally there's large swaths of data being used to run or manage the business, those tend to be very effective places to be able to apply an AI layer on top of the data substrate. Ultimately, I look at these as data substrate intensive businesses that you can build AI systems, compound AI systems on top of. And that's the industries that at least are most applicable for this next generation of applications to be built from an agent AI standpoint. And I indicated where some of those industries are today.
Yeah, amazing. Looking forward to it indeed. It seems it's all about data and adoption. And I have one last question before we move on to Álvaro. We see many startups are leveraging AI to launch with fewer resources, but what advice would you give to a mature company facing the rise of AI? Do you think they have any chance with a new native AI company? Doesn't need all of these resources that the mature company are stuck with?
I think you have to look at this on a more case by case situational basis, right? You can't like presume that just because you're an incumbent, you might not be capable of reimagining your opportunity, mainly because you have these high quality data sources that you can turn into AI systems. And so for incumbents, there is a great opportunity here. Now, when incumbents are in these markets and they're putting their head in the sand, they're not really innovating and they're not iterating on the market opportunity, that's when I think it becomes really challenging for incumbents. So what I try to look for is like, what is the dynamics of that category, that market, and not presume that there is an advantage for startups or incumbents, right? I think in every one of these categories, there is an opportunity for an incumbent to win, and there's an opportunity for a new up and coming startup to also win. I think it really depends on where the dynamics of that market is. In a lot of cases, in some of these older line industries that have had historically, calcified products that have been in those industries for quite a while, that could just as well be an advantage, right? Because it's hard to displace that calcified product. That calcified product could be generating a tremendous amount of data that could be used to build, your AI capabilities that are layered on top of the products themselves that are there. So I try to be a little bit more open-minded and think about the dynamics of that category, the dynamics of that industry before presuming that there is a natural incumbent or a natural startup that could win in that space at any given moment. What I can tell you, though, is whoever iterates the fastest with a high quality set of data that they're building compound AI systems, they're likely going to be the winner in that space, whether it be a startup or an incumbent.
It does seem very interesting. A company that will use their experience wisely could maybe have the upper hand at the end, because experience means also a lot of data to use. So
Yep.
definitely will be interesting to look into it. And I have a bunch of other questions for you, George, but Álvaro here has a lot of great questions to ask you as well. So, George, thank you so much for answering my question. And Álvaro, without further ado, the floor is yours.
Thanks, Yossi. So I want to go back to what was mentioned earlier by Yossi very briefly, data and agents, and beginning in particular with Databricks. So you co-led the Series J and invested in the Series H. What can you tell us a little bit about Databricks and what sets it apart in a world where we're seeing a lot of other AI platforms? And how do you see the use of data today with the rise of AI going forward?
Sure. So when you look at what the advantages are in Databricks today, first it starts off with the fact that Databricks is one of the strongest pre-processing layers, right? It started off with Apache Spark many years ago, and the Databricks product that was built on the enterprise basis also many years ago on top of that open source underpinning. It turns out Databricks is one of the strongest pre-processing layers for petabyte scale data processing. And I think that has actually helped them quite a bit because if you look at a lot of these data intensive industries that I just mentioned earlier, Databricks became a de facto place where a lot of that pre-processing occurred. When you looked at that pre-processing, and what the, capabilities were around it up to this moment, you were always, call it, building up a bit of a moat because that first point of pre-processing was where a lot of the downstream opportunities around both data and AI would come from. Well, one of the first places that Databricks really operated in terms of being able to effective downstream processing was, well, it partnered with a company called Snowflake, which you probably also know, which became the de facto data warehouse for cloud scale data warehousing when Databricks was doing the processing. Over years, though, what's recently transpired is now Databricks also has its own SQL data warehousing product, right? And it's very competitive to another product that might be in the data warehousing space, like a Snowflake or like a BigQuery. And so now Databricks owns a bit more of that SQL processing. It's gone ahead and over the years either built or bought other areas like a Unity catalog for being able to unify a lot of the metadata and a lot of the sort of how you catalog and understand the quality of the data that might be inside your enterprise. Take the Mosaic acquisition that occurred about 2 years ago, which now enabled you to have a high quality inference service that was layered on top of your data infrastructure. And so one of the reasons why we're just really excited by where Databricks was that it had a tremendous amount of trust in the enterprise, a tremendous amount of scale in terms of where the revenue was in the business. It had a tremendous vision for what a unified platform for data looks like and the sort of AI systems that were built, the compound AI systems that were built on top of your data infrastructure. And that's where we were really excited to go in and lead, or I should say co-lead that investment in the Series J. And they're having their user conference this week in San Francisco. We're really excited for a lot of the new announcements that'll come out in the next few days here at the Data Plus AI Summit. That's right here this week. And we just see it's a tremendous company, a tremendous leadership team, and a tremendous opportunity to be like I said earlier, the underlying data substrate, as well as some of the capabilities from an AI standpoint above the data substrate that will be foundational for how many enterprises are kind of executing on their data AI ML strategy. And Databricks is certainly in the center of making that happen.
It certainly seems that the product strategy is working really well. And in relation to strategy, I wanted to talk about the corporate strategy, about staying private rather than go public, because we're seeing maybe this is a trend. There's more and more companies that are staying private for longer. Not only Databricks, there's also Square, SpaceX, Epic Games, Canva. So why do you think that this is? Like, when is it strategically smart to remain private, and when is the right time to go public?
These are market dynamics as much as anything else, right? I mean, when we took Alteryx public in 2017, the market to take a company public was plus or minus 100 million in run rate. And in our case, we're minus 100 million, right? But in the public markets, the company grew all the way into the billions. And of course, Insight and Clear Lake took it private. I think if you look at where you are in the public markets today, you're talking about businesses that are expected to be 500-600 million in run rate. So I think there's been a shift in terms of what the appetite for public companies were and the size and scale of public companies, particularly in the software space, in the last even 6-7 years, that has shifted much more towards larger scaled out ARR businesses that are now capable of being public and being accepted as public companies. I think there's also another shift that's occurred, which is there's a tremendous amount of private capital. And if we think about a lot of that private capital, it's going into keeping companies in private markets, in private hands much longer, and it's fully acceptable to do that. I mean, is there much difference between a, call it perception, a brand, for instance, of a public Snowflake and a private Databricks? Probably not, right? And I think you have a lot more optionality to stay private longer with the amount of capital that's kind of focused on those growth journeys, alongside of the fact that it's just become much harder and much more arduous to go public. And I think that reflects upon the fact that companies are staying longer as privately held businesses, even to the point of a Series J, like Databricks just did.
Yes, and we see a lot of news and announcements that are very, very frequent. You kind of lose track of everything, and not only on what companies are doing, but also in a market where we're seeing so much AI activity. It might even seem like a bubble. Are we reaching an AI saturated market from the user side? So how does your team focus on what really matters? How do you select a company based on what they do when there's so much AI right now?
Yeah, I think I go back to this principle of like how fast are companies iterating and evolving as the market itself is iterating and evolving. And so I'll give you an example. When we did the pre-seed investment in Jackie and Daniel from Relevance years ago, they were still a vector database as a service. And that took a few iterations next after realizing there wasn't enough an opportunity, being the fifth or sixth player in the vector database space, going into becoming an AI app builder. And as that AI app building facility really became available, the realization was like, well, the most important opportunity is to build more agent-based autonomous digital workers, particularly for providing a platform for front office digital work. SDRs, BDRs, content managers, researchers, et cetera, can all exist as digital synthetic workers on top of the platform that was built by Relevance. And the reason I just mentioned that is a lot of that journey happened over the course of a very short period of time, about 3 years, to go from vector database to AI app builder to now a platform for digital front office workers. And so how do you survive that? Well, the only way to survive that is you have to keep iterating. And that's not just a question of earlier, smaller companies with nimble founders can pull off that iteration. It also turns out that some of the largest companies in the world have to also figure out how to iterate and transform. And, we have a significant portion of our portfolio that is much more scaled out enterprise software businesses. And if you think about where our on-site team, for instance, spends a lot of their time right now, it's to help a lot of those investments, particularly in companies that have been scaled out, to transform and reimagine what they are in an AI first world. That's happening everywhere, by the way. And why is that happening? Is because AI is not just eating the software market itself, but it's eating the services surrounding that software. It's also potentially eating the labor function, like the Relevance example that I just gave earlier. So this is a much larger transformation and a shift in how we think about everything in the enterprise beyond just the software value proposition. And we're just nibbling at this right now. It's like the first few innings of this early ball game. And I kind of see, a decade of transformational change ahead of us that we have to embrace and be willing to look at both the opportunities, challenges, and risks in making it happen.
And you were talking about agents, which is something that I was going to go into. So this is a great segue. We see a lot of very large enterprises that are excited by AI agents and they're implementing them in a lot of customer service. I'm not sure that the quality of the customer service is better. And I wanted to ask you about what is hype and what is real and what are the BS buzzwords that we have to ignore.
Yeah, I think there's a lot of noise around the agentic space today, and some of it's actually probably sensible because of how transformative it is. Some of it you just have to kind of see through the noisiness and just understand, well, what's really going on inside of that specific opportunity. So agents can mean a lot, right? It could certainly mean, the autonomous autopilot-based systems that I just mentioned earlier. It can mean the reimagination of robotic process automation. It could mean, what a BPM, a business process management or business process outsourcing function looks like in an agent first world. And all of these things are honestly happening, right? You've seen the public reports of an Accenture or an IBM taking 7,000 people and transforming it into 400 people in a generative AI model. That's happened, right? And certainly that's a place that certain business process functions, business outsourcing functions can be reimagined accordingly. You're also seeing, very public ongoing iteration of, say for instance, the customer service experience in a company like Klarna, right? So Klarna, realized that they could get more leverage and scale out of their AI systems and remove 700 people out of a role, which I don't necessarily agree was the right idea even back then, right? Because some portion, if not many of those individuals could have been retrained for other purposes inside of a high growth company like Klarna. And it turns out when they, went to a full automated experience, that automated experience didn't meet the brand, value proposition that Klarna was already kind of offering. And where did they end up? Well, they ended up with a set of humans and machines cohabitating, co-working, co-collaborating, and co-supporting the customers. And so it wasn't that the answer was to go full agentic automation and get rid of 700 folks. It probably wasn't to stay with 700 folks because that wasn't scaling either. But it was this opportunity to meet in the middle where humans and machines are, I almost think about it as augmenting the work that's accomplished, where machines are augmenting the human potential. And I think that's where most of, I think, the future of the compound AI systems that are being built today are going to end up.
All right, and let's move on to a little bit of a different type of conversation, which is the M&A. Do you think that in the current scenario there is more or less room for M&A as we need fewer resources with the rise of AI? Like you said, different verticals require different needs for these agents, but what about this in particular, this question?
I think there's a lot of deal-making opportunity, a lot of opportunity for additional M&A. I don't think it sort of changes the M&A landscape in terms of the total possible volume of transactions that could be done. And there's plenty of high-quality assets that, might be needed for, say, for instance, a larger company to accelerate their respective AI ML data journey. I think what I try to also observe right now with the M&A markets is like if you were a buyer, whether that be a private equity firm, whether that be a strategic that might be looking at a particular company, you kind of want to know that they, as a acquiree, someone who's about to be bought, has at least the basics of their, AI journey well buttoned up, right? The basics being like, okay, you have a good understanding of where your product can evolve in an AI first way. And you've kind of already gone down the path, you start to execute upon it. You start to figure out how AI can be used to improve the operational efficiencies, right? Perhaps not by cutting 700 people, but by taking the workforce that you have, reskilling that workforce to go do the less rote repeatable work and giving that rote repeatable work to your agents to go do. So even in a potential acquisitive situation, You almost want to be a company that is leading from a front, particularly as they think about their AI strategy. That's where I think the M&A market is still very robust. But if I were an acquirer at any point in time, I would want to know that there's a very strong pulse on how to build a compound AI system for the topical markets that that company is in. And so that's what I would look for if I was a potential buyer. And I think buyers are sophisticated enough to start to look for those cookie crumbs, at least from an AI strategy standpoint and AI execution standpoint in any future acquisition that would be made.
And in the future, maybe their own AI will tell them what to do regarding that M&A strategy. But now,
Well, it's funny you mentioned that because I think we're at a point now where even if you can't necessarily build an M&A, call it whatever, planning, assumption, investment thesis, and execution path, you can certainly get a pretty high quality investment memo done, right? And it's not perfect, but it's gonna kind of point in the right direction on whether an investment might make sense, particularly with public company data. It's a little bit trickier with private company data because you have to have good high quality private company data to be able to pull that off. But I I wouldn't be surprised even in the venture capital, investment management, hedge fund, investment banking, the sort of some of the key pillars in financial services in particular, you're going to just see more agentic automation into the way that work gets accomplished. So the analyst might not be generating those 50 pages of PowerPoint when their MD pings them at 2 a.m. in the morning. It could be a press of a button and suddenly the high quality PowerPoint is generative, right? And the tech exists at this point to do that. So I think we're going to see a lot more of those things that are automating the rote manual portion of work, even in markets like venture capital, private equity, hedge funds, the financial services industry on a broader basis. That could be pretty sufficiently reimagined with the emergence of these agentic AI systems.
all these comments you just mentioned, we have a host of listeners from the financial services industry that are now really excited about maybe having a life outside of those tremendous work hour weeks if AI can help them. But
yeah, I mean, think about it this way: like we have all had friends that have gone through the IB whatever roles early in their careers. I personally was not one of them, but you probably know one or two, and certainly I do as well. I think there's a value to what a good banker can do, right? And everyone knows what that is. But I don't necessarily subscribe to the idea that like rote manual work that could potentially be automated with a high quality intelligence plus reasoning engine, which by the way, that's where models are that you can build these sort of scaffolded agentic AI systems from. Like we've got everything we need to be able to build that as if not a co-pilot, it could be a full digital worker that does all the sort of rote mundane tasks that might be farmed out to the digital worker from the analyst that got the call. And maybe the analyst doesn't need to receive the call at 2 a.m. in the morning. Maybe work can be rethought of in a different way where that work can be done in a more sort of a sane set of time than keeping your analyst awake at 2 a.m. in the morning. And maybe that's a rite of passage, but in reality, most of these things are capable of being both automated and transformed with AI. And I think that's the future that we're going to be rushing in faster than ever, particularly for this next half a decade and beyond.
lots of hope. But I have a bunch of other questions regarding this because it's fascinating. But we're nearing the end of the interview, and now we have the really fun part of the interview, which is the personal questions. So, as you know, we have a lot of students and young professionals and entrepreneurs that listen in on our podcast. And if you had just one piece of advice for entrepreneurs, what would it be?
I think this is a moment to be very intellectually curious. It's a moment to really think about what first principles are, because I think anyone who's going into this presuming that there's a rigid plan and a structure to be able to go figure all this out is likely going to be quite surprised that there isn't. I think everyone is figuring it out. I think there are very smart, capable people that are going to build generational companies in the midst of this opportunity, this dislocation that's in front of us. Generally, I tend to be a little bit more positive about the real outcomes here. There's more positive outcomes with how our compound AI systems are being built, that we would see greater productivity gains. We'd see greater opportunities for anyone who's entering the workforce today than that might be a little bit later in their career. So I would go in with a beginner's mind that is very open to the fact that a lot of things are going to change in around them as they're going into the workforce or early in their career as part of the workforce, and use this as an opportunity to build a tremendous career, because the next 20, 30 years are probably some of the most exciting, not only to be in any kind of work that has an enterprise implication to it, but frankly, just being part of human society, because everything that we're talking about here has an impact not only on work, but really how we live.
All right. And talking about how you live aside from work, are there any special hobbies that you have?
Well, I'm a dad of three daughters, so that keeps me
Easy enough.
pretty occupied these days. So yeah, we have two teenage daughters and one preteen. So that is a good amount of the free time that I barely even have today. So that's where I try to spend time right now. I'm getting back into working out, believe it or not. That's a thing that I hadn't been doing consistently for a while. So I've been, a big proponent of Orange Theory, and particularly using Orange Theory strength to just kind of build a little bit more of a routine around just how I'm healthy while I'm going through all this sort of dislocation and change in my work and personal life. But yeah, it's beyond just like, a little bit more extra time that I'm trying to spend with my family and, some time just staying healthy. It's wonderful to be in New York again after 15 years in the Bay Area, although I seem to be on a plane quite a bit, mostly for work. But yeah, that's what kind of keeps me sane and happy while going through all this change.
Okay. And while you're on the plane, there's not much to do, but you can watch movies. Is there a favorite movie?
Well, I read a lot, to be honest. I use that as an opportunity to catch up with my favorite podcasts. Hard Fork is one of my favorite
Not
podcasts.
the Boredom Club.
What's that?
I said not the Boredom Club, your
Well,
favorite?
I just came part of this podcast, so it's going to soon be one of my favorite podcasts. But up to this point, a hard fork. But from this moment on, of course, everything can change. I do a lot of research as well in terms of what the current, call it changes are that are happening in the world around us. And so I do spend a little bit of time on that. I haven't been watching a lot of movies, although I hear the new Mission Impossible movie is supposed to be amazing. So I'm kind of looking
I
forward
watched it a
to.
couple of days ago. It's amazing. I mean,
Okay, all
it's the
right,
last
good.
one of the saga, and
Yeah,
I mean, Tom Cruise at his best, as they
yeah,
say. I don't want to
yeah.
spoil it too much.
Yeah, I saw part one. It was years ago, but I'm looking forward to seeing part two. I think whenever a new Wes Anderson movie comes out, I'm always excited for that. I think there is one out as we speak. That seems like a exciting thing to catch up with. I'm a huge Wes Anderson fan. But yeah, I think with the sort of time that's available, I've become much more curated in terms of the amount of consumption of movies and serials that I can take in. But yeah, when I come across a good one, I do try to spend some time with it.
George, it's been really a pleasure. Thank you so much. I'm gonna give it back to Yossi.
Yeah, so George, thank you so much for joining us. We learned a lot from you. It was a super interesting conversation. So thank you so much. And for everybody else in the audience, stay tuned. In this AI Summit, we have a bunch of other cool companies that are going to join us, like Sentinel One, funded by Insight, Glean, Kale, Zafan, and another company that's got funded by Insight, Armis. So definitely looking forward to. And George, thank you again.
Okay, appreciate it very much. Thanks for having me, and looking forward to how your podcast continues to evolve and grow and scale and take, new heights as you bring in incredible founders and incredible folks that are in the tech software space that will continue to have these great conversations with you.
Thank you so much, George. Okay.
Thanks,
Bye.
guys. Bye.